Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit SDBullion.com today. SDBullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to SDBullion.com today. Enjoy more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with your SD Weekly Metals and Markets Wrap, and our guests today are Eric Dubin and James Anderson from SDBullion. James and Eric, thank you so much for joining us today.
Thank you for having us.
All right, now James, I was interested in your perspective on JPMorgan's silver position on the COMEX, because you've recently written an article about this, and you say that it's at a record high level compared to really anyone else who has had a silver position in recent history. They have 133 million ounces, and your argument is they're probably owning the bullion for preservation and speculation.
Yeah, that's correct. I mean, I just finished writing an article and got published on valuewalk.com today, and it is pertaining to, the largest modern day silver positions ever held that, you can find based on fact and figures. And if you go back to the 1970s, 1980 bull run, obviously there's that scapegoating of the Hunt brothers saying that they cornered the silver market when they had about 100 billion ounces of silver in physical form versus another over 100 million ounces of derivative form silver that was traded on the COMEX. The COMEX changed the rules in January as silver was hitting $50 an ounce, and those rule changes prohibitively hit the Hunt brothers and anyone else who was long on the silver COMEX, and they lost billions and had to be bailed out by the Federal Reserve and, a consortium of 21 banks, I believe, to a tune of about $1 billion. Years later, they were tried in court and fined hundreds of millions of dollars and scapegoated for decades to follow. So that was the first major position, which was essentially 100 billion ounces of silver in 1980. The next major position of silver that's historical was the 129.7 million ounce position that was taken by Warren Buffett, Charlie Munger, and Berkshire Hathaway. That started in 1998. And it continued to 2006 when they sold it. I believe they may have doubled in price as far as, their actual investment. Silver, I believe, went up about twofold in that time frame. And that position was sold off to likely begin the ETF of the most popular silver ETF called SLV that I'm sure most listeners are aware of. So that was 129.7 million ounces. But recently, JPMorgan broke through that level. It was probably this past summer that they got through that level. And this past week, there's just been a heavy amount of silver, millions of ounces going into their COMEX depository. I think the total now is, like you said, it's over 133 million ounces. And it's not to say that JPMorgan outright owns all that, but they certainly own a lot of silver that's outside of that because they're constantly withdrawing silver bullion out of the SLV because they are not only an authorized participant, one of only a few, which means that they can swap SLV equity shares for silver bullion. But they're also the custodian of the thing, right? So they literally are in charge of the 300 million ounces of silver that sits in the vaults in London that they look over. So it's essentially like the fox looking over the henhouse situation. And the question, I guess, just comes to mind. It's like the timing of it all. Like they started with nothing, with no silver bullion in April of 2011, as the price of silver was hitting $50 an ounce. You had crazy things going on, like Max Kaiser running around the internet saying, buy silver, crash JPMorgan. I mean, it was broadcasted on Russia Today. And it was essentially, it was pretty crazy what was going on in the market. And it's not that you would have to be a fool to think that they didn't see all this going on and didn't potentially learn from it. My contention is essentially they've been acquiring silver this entire time that they've likely helped to keep the price, suppressed because they are the largest, most concentrated short on it. So they've likely been making a lot of money trading it short. And then at some point when, the price starts to go up, because inevitably it will have to, my assumption is that ultimately we're headed toward a debasing dollar in the future because of just all the unfunded liabilities and the debt overhangs. So essentially JP Morgan's getting both. They're getting to make money on the down over these last 7 years. And in the future, when we start having revaluations of commodities, they will likely make a lot of money in the future based on their silver position. And likely as well, it's also I think an attempt to preserve themselves because they probably flagrantly overtraded their entire value. And if they have a bad bet here or there, they'll at least have some physical bullion to hopefully make up for some of those lost bets.
That's a really great summary.
Eric, if you could jump in here, why do you think that JP Morgan has such a large silver position?
Yeah, that's a great summary, and clearly, the administering the SLV and the requirements associated with that is something that enables JP Morgan to see a huge amount of the marketplace in silver lit up, seeing all of the players, understanding the book that comes for SLV, understanding what's going on in both the LBMA and the COMEX as a major bullion dealer and not bullion dealer, a bullion bank, as one of the primary bullion banks. We know that silver is massively manipulated. We can see the very big picture when it comes to, for example, what goes on with the caught, wash, rinse, repeat cycle that we have reported on ad nauseum for years at Silver Doctors. It's not in question anymore. We have the regulators busting Deutsche Bank and other banks, bullion banks, for being involved with spoofing orders and manipulating the markets that way. The revelations that came out of that court case didn't go deep enough. As I warned, literally on the very day that the Deutsche Bank was being reported for being under investigation, Doc and I did a show on that, warning that wasn't going to go very far, and it hasn't. What JP Morgan has been able to do is hide how they manage the silver market. And part of how they do this is not something that I can prove, but when you own major or control major portions of a market, you're able to understand that market. And controlling the warehouse inventory for SLV combined with this 100+ million ounce position, they have a lot of power, and they move their inventory around within a short period window that escapes reporting requirements, and this is how they manage the market. A while back, Blythe Masters was on CNBC when she was still working for JP Morgan as their commodities head honcho, and she was asked point blank, what's the story with JP Morgan's rising and large inventory position? And she just poo-pooed it as saying, well, we own a lot of silver for clients. Clearly, that's not what only is motivating JP Morgan. I agree with the thesis about them seeking to have a hedge against the downside market action that's coming, and that's part of what they're doing. But I think their primary motivation, ever since Bear Stearns and their role went up in smoke when Bear Stearns died, and JP Morgan rose to take on a much bigger position within the silver market, I think they just have become the primary bullion steward of the manipulation of silver. And at some point, this kind of information will seep out, and people will be able to prove it, I hope.
Yeah, the difficulty in all this is obviously this is a lot of speculation, and the most difficult thing is to trade on that and to hope that it's correct, because inevitably when the answer is right, if it is right, it'll be too late probably then to act. You're talking about a situation where prices are going up, vertically, and then you're talking about paying through the eye for premiums on any silver bullion you can acquire at the time, right? So that's the ultimate difficulty of the whole situation.
Right, and right now, if the manipulation is something that's really going on, really the low prices are really a gift right now, right?
No doubt. If you're someone who believes in silver and you want to go long silver and you have a long-term time frame, something to the 2020s, I believe, it would make total sense. Not just silver, but also gold too, or platinum and palladium potentially. But I mean, it's proven if you back test stocks and equities in the United States versus bonds and versus bullion. If you back test it from 1968 to now, or to 2016, you should have had roughly a 25% allocation to gold and silver, and that back testing essentially doesn't take into account any type of dividends or anything like that. So keep that in mind. The study doesn't take into account real estate or anything like that. It's just the study that I'm citing is simply bonds versus equities versus bullion, and it in the long term, especially under a fiat currency regime, it totally makes sense to have an allocation to bullion at all times.
All the more so after such a long period of depressed prices and trading. I mean, we're living in a world where the cost of production and the decline in production going forward is going to guarantee higher prices, regardless of what the cartel does. They're going to have to back off. Otherwise, they will risk breaking the system of manipulation that they control. Physical will make that happen.
Now, moving on here to this week's action in the precious metal markets, we saw gold go to about $1,350, which I know is a very key level for gold. What is your perspective, Eric, on the technical analysis side of what we saw in the gold and silver markets this week?
Well, frankly, the technical stuff really isn't all that interesting in this particular shorter window, other than the fact that we bounced on areas that didn't, surprise all that much. Silver not breaching 16, gold, holding roughly 13 and change, the dollar finding some support at 88. All of these, the bond market having reactions when the 10-year was threatening to take out, the 30-year threatening to take out 3%, and the shift in expectations on a going forward basis and what all that means. All of these kind of things confluence in the last 2 weeks to, in my mind, paint a really interesting picture about where people's sentiment and psychology have changed when it comes to a number of markets, and how that relates to gold and silver is key. We've lived in a world where, since the 2008 crash, the bond vigilantes have gone on vacation on the assumption that central bankers were dead serious on saving the system, and they were. It was the right call. Volatility went to almost nothing. We had 500-year lows in interest rates, and everything just was skewed to the point of ridiculousness when it came to how far people were on one side of the boat when it comes to psychology. What was interesting in the last 2 weeks when we saw this market correction is that we've been seeing the dollar go down while interest rates were going up. Generally speaking, in economics, people make the assumption that interest rates going up are going to attract more interest in bond buyers, because bond buyers would say if they borrow Japanese yen to purchase U.S. treasuries, translating that into dollars, they would make even more profit if the dollar was going up over a 2-month holding period. Hot money moves. It doesn't care about 10, 30-year, whatever duration holding periods when it comes to bonds. It's just looking for hot moves that can capture a couple percentage moves in short-term profit. What we saw in the last 2 weeks is fascinating. We saw the dollar falling, interest rates going up, and stocks going down. It's a complete flight to safety and abdication of even the idea that the stock market would be going up in the future on account of stronger economics and higher dollar, bringing more interest into U.S. dollar-denominated assets. We're also seeing, a couple weeks back, the Chinese let out a story that could conceivably be a trial balloon when it came to how they're managing their accounts for FX and their foreign exchange reserves in the U.S. dollar, and how they talked about possibly not being interested. There was a Bloomberg report in particular that came out talking about how China was interested in lessening its holdings of U.S. treasuries. It really does look like there's a reawakening of the bond vigilante community and a lot more skepticism when it comes to the long-term trend of U.S. treasuries and the general paradigm when it comes to interest rates. Interest rates going up with the dollar going down is an interesting signal. I think people are waking up to the reality that the stock market is massively extended and overvalued, and interest rates are going to go up no matter what the Fed and other central bankers do, even though they'll be protesting periodically and backpedaling on all of their claims about balance sheet normalization and, quantitative tightening and stuff. So short term, the move that we've seen, this really fast snap back in precious metals is telling. I think we did see a tiny bit of liquidity drawdown. When margins calls come in, it wasn't just 100% manipulation, although that was definitely there. Even Bitcoin's decline and the cryptocurrency's decline was partially linked to people needing to rush to get some liquidity. But now as the dust is settled, the dollar right now is up. If I'm looking at the live real-time quote for the March 18th dollar DXY futures, and that's up 0.5967% right now. So the markets went through a two-week freak out, and I think that the sentiment is now finally shifted around, and people are a lot more skeptical, and that's a good thing. But we'll probably stabilize in the general equity market. The central bankers put in a lot of liquidity, and we'll see footsteps of that as time goes on. In the next week or so, we'll be able to see more of that kind of data, and we'll go back to sleep for a couple of months, and maybe equities will go up, and we'll see the S&P 500 try to take out 3,000. I don't think that this was it was just a shot across the bow when it came to people waking up to the realization that there's real risk in the markets, and this volatility trade in particular blowing up is what woke a lot of people up. That combined with what's going on the interest rate paradigm. So long term, this year and further out, I think we're going to see a lot higher prices in precious metals as markets revert to the mean. Interest rates going up, stock market going down, metals going up.
Yeah, and just real quick to follow up on the DXY on the U.S. dollar index, if you look technically at the chart as far as, how it's performed, especially in the last major bear market from 2002 down to 2005, it looks like this one is essentially the same type of angle and calling for something like a U.S. dollar low hitting around 2020. So it definitely calls for higher bullion prices in the next few years, just based on the fact that the dollar's going to be losing value versus other currencies, most likely.
Definitely. And what is your perspective, James, on the bonds, the interest rate rising, but then also the dollar falling? And it doesn't normally work that way, as Eric was saying.
Yeah, for a while there, even now to this day, I still feel like at some point rising interest rates are going to cause a major problem. And at that point, the Federal Reserve, that's my hunch, is that this is the reason why they've been trying to raise rates and talking about raising it 4 times this year. They need to have some type of clearance for when the market does finally go into recession. They have some room to start cutting rates. And my belief is we're heading into a situation, the 2020s, where we're going to see even further lower rates than we saw last time. We're probably going toward a situation where they may even do negative interest rates here. It's going to be a kind of a twilight zone, negative interest rate world where we're going to have essentially rates lower than last, and we're going to have a stagflation economy where they lie about what's going on with inflation, and they keep rigging the inflation statistics, and essentially we have a huge gap between real rates and what's going on in the real world as far as prices. It's basically keep them confused, and we're just going to keep debasing the dollar and have a 5 or 10% gap and run that for a decade, and then we'll get out from under, hopefully, the unfunded liabilities and the massive debt that we've accumulated. That's essentially the longer-term vision of where I think this goes.
Yeah, and let me build on that a little bit just to help people understand. When it comes to dollar moves, the FX market is huge. It's over $5 trillion in notional value flying around in any given trading day. What happens is people will go to Japan, borrow yen, buy U.S. dollars to purchase U.S. dollar-denominated assets. And what we've seen in the last 2 weeks has been a shift in some of that. And it tells us about where global expectations are when it comes to the United States equity and bond markets. That was the telling signal from the last 2 weeks. It's the take-home message that the market was sending.
Now, moving back to the precious metal markets, we saw, I guess, good news for gold and silver this week. Another state, some states have done this before, another state, Idaho, said basically no more taxes on gains or losses from selling precious metals. So I guess starting with James, what does this mean for the gold and silver markets?
Yeah, every state that comes out and does this, it's positive. I mean, there's people who believe in states' rights over trading for precious metals, and this is just confirmation. Another state, validating that point. Of course, anyone in Idaho who bought gold or silver and then later sells it for fiat currency would certainly have capital gains taxes to pay to the federal government, because the federal government has yet to validate our point here that constitutional money shouldn't be taxed. But, if as the trend of each state falling down like this keeps occurring, who knows, maybe at some point down the line in our lives, the federal government will come around. But I'm not I'm not optimistic that that's going to happen anytime soon. We'll probably have gray hair by the time that happens. But it is validation in the sense that there are a lot of state legislatures who believe in sound money and who believe in constitutional money. So, and it's another good point as to why people should not just simply buy private mint bullion products, because I like the optionality sometimes of having legal tender currency, legal tender rights on, say, an American Silver Eagle and an American Gold Eagle, because you literally can use those in private sale contracts, and they're enforceable in a court of law. I mean, if you had, for instance, Elijah, if I was going to buy something from you, like a used car, we could draw up a contract that could explicitly state I'm going to, pay you X amount of American Silver Eagle 0.99 silver coins. And if I didn't come with the payment, you could show up in court and say, he owes me that payment, and it would totally be court enforceable if it was signed by an actuary. So, I mean, it's a lot of legalese, but who knows where it goes in the future with gold and silver prices and values. And just having that option of being able to use them to buy things directly is, it's somewhat appealing.
Yeah, it's a great development, and there's been a number of states that are jumping on this bandwagon. Even Oregon is looking at it where I live. It'll be a number of years before they get anywhere in the state legislature, but I've talked to state senators and representatives in Oregon about this as well, too, and Ron Paul has been talking to people as well in other states, and this movement is alive and well, and it'll grow. It'll be wonderful to see how over the course of the next 5 to 10 years what happens when it comes to cryptocurrency, blockchain-powered currencies that link up to stores of value, warehoused gold, and whether or not we see a state doing interesting things when it comes to local currencies. There have, in fact, been discussions at the state level throughout the decades of launching local currencies, and there are tiny examples of local currencies up and running. Who knows? Maybe we might actually see some innovation after some kind of a financial crash. It would be wonderful to see these kind of things, and I'm openly speaking about this in part just to cast this out as broadcast on the waters and for people to think about it, because I'd like to see politicians and activists and people within the cryptocurrency community, et cetera, think in these terms and begin to see some kind of political pressure percolate over the course of the next decade to see this kind of evolution. If we see that, that'll be a wonderful thing.
And one point on that, it always goes back toward legal tender laws, right? And the state wants the right always. It's their prerogative. They feel like it's their born prerogative to be able to issue the currency and mandate everyone to pay them in taxes with that currency. And any competing currency has to pay capital gains, right? Whereas I think humanity, maybe in the next 5, 10, 20 years, is going to get conscious enough to realize that that's a scam, and that's how they get hoodwinked. Hundreds every day, every hour, every moment they're working, they're getting hoodwinked with that scam. So the separation of state and money issuing power is something that is a real important issue that people need to start learning about.
Yeah, and I'm reminded of the example of North Dakota and how they have their own state-owned bank system, with a bank that benefits from the float and holding of the assets of retirement funds for the state and things like that. I can easily see an evolution over the next 10 years after our next financial crash, and we're going to have one. It's a question of when, not if. That shakes things up. That bank in North Dakota was born after the Great Depression in response to farmers losing their farms and the depressionary impact of what happened to our monetary system. Things change massively when we have huge crashes like what is coming, and the confluence of technological developments and what's going on when it comes to perhaps gold becoming part of the currency system in our future in response to the regulators and policymakers scrambling to try to fix the messes that they always make, might be the silver lining, forgive the pun, for what may be in our future when it comes to these little incremental moves at a state level. This news from Idaho fits into that overall trend when it comes to individual state sovereign entities. Our so-called constitutional system, as watered down as it is, and how they relate to the behemoth in Washington and its money-making or currency-making, debt-creating power.
All right. Well, Eric Dubin and James Anderson, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had? And James, I know that you have a new guide to gold and silver that you have published for any Silver Doctors viewers on the website. Can you tell us about that?
Yeah, we just created it's an over 200-page PDF on the 21st century gold rush, and it's chock full of practical insights and information that's pretty up to date. I just completed it, I think in January of this year. So a lot of the content in there is fresh and up to date, and it has real practical things that you can use in the real world, like intelligent ways to not just buy gold and silver, to vet any dealer that you're potentially going to do business with, especially online dealers, how you can find organic reviews versus the fake rigged review sites that a lot of the companies use, as well as how to ship and sell gold and silver intelligently. So the URL to find the book is sdbullion.com/book. And that's how you can find it. And it's totally free. It's just an email address to get it.
All right, Eric, any last thoughts you'd like to add?
Well, this weekend I'll be putting some stuff on my Facebook wall, and people can follow my work on facebook.com/Eric Dubin. My name is spelled with a C. And I think that we're going to trend a bit higher, and that we have largely stabilized when it comes to the correction that we just went through, thanks to powers that be calming people down. But this is just a warning shot across the bow. I think we're going to see a lot more of exactly what we just went through later this year.
All right. Well, this has been your SD Weekly Metals and Markets Wrap with James Anderson and Eric Dubin.